Hey everybody, welcome to the channel. Soil here, and today I want to teach you a trading strategy which is called 930. It's a day trading setup based on exponential moving averages for trading pullbacks and riding the trends. If you are interested to learn this awesome day trading strategy, stay tuned and let's get started. Unlike other moving average strategies that are usually based on crossovers to generate reversal trading signals, 930 is a trading strategy for trading pullbacks and entering in the current direction of the market. As you all know the saying, trend is your friend. So by generating trading signals for riding on the trends, this trading strategy provides you high probability trades with minimum amount of risk. In this trading strategy, we use two exponential moving averages with length of 9 and 30. Here, the 9 EMA is our short-term moving average and the 30 EMA is actually our long-term moving average. And in this strategy, we're going to take advantage of the area between the two moving averages. This is a day trading strategy and time frames like 5 minutes, 15 minutes, and 1 hour are suitable for this trading strategy. As I just explained, this is a kind of trend following strategy and we want to enter in the pullbacks. So please pay attention that we don't use this strategy in flat markets and we use this strategy only when the market is trending. So the first step is to find out if the market is trending or not. You can identify trends by the help of price action analysis. For example, if the market is making higher highs and higher lows, we can say the market is in an uptrend, or if it's making lower lows and lower highs, we can say the market is in a downtrend. I have a complete guide on this. I also put the link in the description of this video and I recommend you to watch it later if you don't know how to correctly identify trends and draw trend lines. We can also discover the direction of the market by the help of these two moving averages. When the 9 EMA is above 30 EMA, the price is advancing and it's in a bullish trend, and when the 9 EMA is below the 30 EMA, the price is declining and it's in a bearish trend. You can also evaluate the strength of the trend by the help of the area between the two moving averages and the angle of the moving averages. The bigger the area between the moving averages and the steeper the angle of them, the stronger is the trend. And on the other hand, the smaller the area and the flatter the moving averages, the weaker the trend. Also, it's a good idea to analyze multiple time frames and have a look at the longer time frames to find out what are the overall trend and major support and resistance levels, so you can be sure that the trade entry you're taking on the shorter time frame is in the direction of the major trend on the longer time frame. If you're not familiar with multiple time frame analysis, I have a video on this, the link also in the description of this video, and I recommend you to watch it later to learn this valuable technique. Alright, now let's see how we get the trading signals in this strategy. For buy signal or the signal for opening a long position, first the 9 period EMA must be above the 30 period EMA and the two moving averages must be apart from each other. In other words, you must see a space between them, and then we must wait for a candle that closes below the 9 period EMA, and this is considered our trigger candle. Please pay attention that the trigger candle must remain above the 30 period EMA to make this trading setup valid. When the price closes above the high of our trigger candle, it's a buy signal or it's a signal for opening a long position. Aggressive traders may choose to enter a trade when the price passes the high of the trigger candle, but a safer entry is here when the price closes above the trigger candle high. Please pay attention that the closing candle must show buying pressure. In other words, the closing price of the candle must be close to the high of the candle. For example, at this point here, the price closed below the EMA 9 and we didn't have any close above its high until here, which is not a significant close above our trigger candle high, and they are actually dojis and show indecision. And you can see that here again the price went down below the EMA 9 and here we got a significant close above our trigger candle high. And for placing stop loss, we can use the trigger candle. For this trade, we can set the stop loss below the low of the trigger candle or the low of the breaking candle or any candle in between if it's lower than the trigger candle low, like here in this case that the between candles have lower low than the trigger candle, so we can set the stop loss here below this low. If you think it's very close to your trade entry and you don't want it to be so tight, or you're trading in a high volatility market like crypto, or you're trading in very short time frame which is very noisy, you can give it more room and place it below the 30 period EMA. For the profit target, if you intend to take short-term profit, if the price is moving in a channel, you can take your profit when the price reaches to the upper channel, and if it's not moving in a channel, you can approximately calculate the average of previous swing highs. If it's not applicable in your case, you can analyze the price action and exit your position when you see signs of increased selling pressure. And if you intend to stay longer in your position, in other words, you want to ride on the trend and get the most out of it, you can exit your position when the price closes below the 30 period moving average. One good strategy here is after every pullback, move your stop loss higher below the EMA 30. So by doing this, you lock in your profit. And for sell signal, or the signal for opening a short position, the 9 EMA must be below the 30 EMA, and the two moving averages must be apart from each other. In other words, we must see a space between them, and then we must wait for a candle that is closed above the 9 period EMA and is considered our trigger candle for the sell setup. When the price closes below the low of the trigger candle, it's a sell signal, or it's a signal for opening a short position. Aggressive traders may decide to enter a trade when the price passes the low of the trigger candle, but this has higher risk, and a less risky entry is here when the price closes below the low of the trigger candle. Please pay attention that the trigger candle, this candle that closed above 9 period EMA, must remain below the 30 period EMA to make this trading setup valid. The stop loss for this trade can be placed above the trigger candle high, or the high of the breaking candle, or any candle in between if it's higher than the trigger candle high, or you can set it above the 30 period EMA if you want to give it more room. And for profit target, similar to long position in our previous example, if you intend to take short-term profit, you can exit when the price reaches to lower channel, and if the price is not moving in a channel, you can calculate the average of previous swing lows and apply it for your profit target, or you can just analyze the price action and exit when you see signs of increased buying pressure. And if you intend to ride on the trend and get the most out of it, you can exit your position when the price closes above the 30 period EMA, moving your stop loss and setting it above 30 EMA after each pullback is a good strategy here to lock in your profit. 930 is an effective and powerful trading strategy that can be used in all financial markets. This is a pullback trading strategy in a trend, so the power and effectiveness of this trading strategy comes from the fact that entering in the direction of the trend provides you a high probability trade with minimum amount of risk. Please pay attention that this trading strategy doesn't provide 100% guaranteed signals for making profit, and is prone to false signals like any other strategy, especially when the market is highly volatile. So you must always prepare yourself when the price goes against you and have the required measures for your risk management strategy to limit your losses for that case. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it. Please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.